Hi, thanks for your interest in 1-2-3 strike. In this video, we'll be covering what is 1-2-3 strike, how does it work, its logic and styling parameters, and a practical trading example to show you how it's meant to be used. 1-2-3 strike is a trend-following indicator and trading system that tracks subtle changes in the three trading dimensions of volume, trend, and volatility. It spots ideal moments to enter trades before powerful moves and exit in time to profit. It's available for TradingView, Thinkorswim, NinjaTrader, MotiveWave, TradeStation, and more. 1-2-3 strike looks for specific progressive changes in volume, trend, and volatility to signal high probability entry and scaled exit points. When volume and volatility are high, it begins to consider potential entries based on recent changes in trend and momentum. This enables it to capture entries before trends start and before they continue. A protected process is then used to calculate the scaled exit points. When the volume, trend, and volatility conditions which initiated a trade begin to falter, scaled exits are taken to make sure we secure our profits and defend ourselves against losses. The logic parameters allow you to control the indicator's approach to the three trading dimensions. The volatility period controls the relative volatility calculations used to determine the recent momentum and change in volatility. A longer period will react more slowly to changes, while a shorter one will react faster. The volume period controls the look-back used to determine whether current volume is relatively high or low. Exit on high volume reversal is a toggleable option which causes the indicator to take a scaled partial exit when an exceptionally high volume bar occurs which is opposite to the current trade's direction. The fast and slow MA periods control the periods of the simple moving averages which play a key role in determining trend. These periods also control the trend-based bar coloring. The long and short partial exits define the maximum number of scaled exits you want the indicator to take for each entry. These exits are intended for guided trading and don't affect the entry signals. They're meant to be used to your advantage for better position sizing and profit taking depending on the long-term bias of the chart. For example, if you're trading an instrument which is historically in a long-term bullish trend, it would be wise to increase your long partial exits and thus scale out your profits on the long side more slowly, and decrease your short partial exits such that you're taking your short profits quickly and moving on before a bullish reversal. The styling parameters provide total customization of every visual aspect of the indicator. The trend-based bar coloring can be toggled and customized, and the style and color of the entry-exit lines and signals can be selected as well. As we'll soon see in the trading example, 1-2-3 strike also has the ability to display the average efficiency of its signals on the chart, allowing you to gauge expected performance and conveniently optimize your parameters at a glance. Next, let's take a look at a trading example where we'll apply 1-2-3 strike to a chart and see how we can adjust the parameters for better performance. We'll apply it to the 1-minute chart for Apple. When the indicator is applied, we can see the entry-exit lines connecting our entry signals to their scaled partial exits. But most importantly, we can see the average profitability for our long and short trades, which tells us how the indicator is performing on this chart. While it's already net profitable with the default settings, we can definitely improve performance. So let's analyze the chart and see what can be done. From the get-go, it's clear that there are a lot of short entries being opened too late and getting closed out shortly after opening. These short entries seem to be reacting to downward moves in price action, but they're a little too late for the game. This is usually because our fast MA period is too long to catch these price changes, while our slow MA period is too short to get a grasp of the overarching long-term trend. Since 1-2-3 strike is a trend-following indicator, we want to make sure that these MA periods are set up properly. Based on that intuition, let's try shortening the fast MA period to 3 and tripling the slow MA period to 63. So we've definitely filtered out some of those late short entries, and we've significantly improved our profitability in both trade directions. But we still have a couple of these late acting entries that are costing us performance. So the next thing we might want to consider is the detection of changes in volatility. Looking at this chart and noting specifically that it's the 1-minute time frame, we can see that it doesn't really tend to take 7 bars to notice a change in volatility. In fact, for most of our successful entries, we can see that the change in volatility would have been noticeable if we had compared the entry bar to those just a few bars back. So decreasing the volatility period to something like 2 or 3 might help us get more accurate signals, catch our entries earlier, and clear up these problematic areas of flat trades. We can see now that those flat entries and exits we had are gone, and have been replaced by more logical signals. Our profitability is also the highest it's ever been for both trade directions. Let's take a look in replay now and see if this performance holds up historically. If we pause to check our average profitability, we can see that we're still maintaining similar levels, and we definitely did a good job manually fitting 1, 2, 3 strike to this chart and time frame. A similar thought process can be applied to any chart and time frame to help us achieve the best possible results. While the best settings will usually be found by automated backtesting and optimization, we hope this gave you a really good intuition of how 1, 2, 3 strike is meant to be used and how you can adjust it to fit your own trading style and setup. Thanks so much for watching and for being a part of our community of traders.